What's up, independent agents? Are you driving your clients off to the carrier self-servicing platforms after the sale just to minimize your service demand? Stop doing that with the premier mobile and web agency solution, GloveBox. Now you can keep your clients in front of your agency at all times, all while delivering the carrier self-service experience that will minimize your service costs and absolutely wow your customers. On top of that, GloveBox will help you increase your cross-sales, referrals, and overall retention with an easy-to-use policyholder interface. Trust me, guys, we're using this at Portal Insurance, and this is literally happening. We are selling policies and servicing policies through our app. Schedule your demo with GloveBox today, and be sure to mention the Insurance Guys podcast for 20% off of your subscription for the life of your account. Guys, it's so cool that I can tell my clients, download the Portal app.
Insurance agents from around the world, welcome to the Insurance Guys podcast. My name is Scott Howell, your fearless host and leader, insurance agency owner and insurance evangelist for I Protect Insurance and Financial Services, based out of Huntsville, Alabama. And before we get started on today's episode, please help me welcome. He is a 6'3" sophomore from Saraland, Alabama. Parade first team All-American, Rivals 5-star recruit. He is a fantastic insurance agent and a great American. Ladies and gentlemen, please put your hands together and welcome the incomparable Mr. Bradley Flowers. How are you, Bradley?
Great, Scott. How are you today?
Best I have ever been. Bradley Flowers, I just got back from the mountains. 3 days, 3 nights at the top of Gatlinburg, Tennessee. Had a fantastic time. And then I get back to the office this morning, and as it always happens, and every insurance agent listening to this right now will be right on top of this, all hell breaks loose as soon as I get back in the office this morning. So I am proud to be here, though, guys. We've got a very special podcast for us. Bradley, you got to tell our audience, I know they can't see it, but you've got this enormous water buffalo, Tatanka, in the movie with Kevin Costner. What was it called? Dances with Wolves. Tell everybody the story of the buffalo behind you.
So the reason I have the buffalo painting, and some of you that subscribe to my YouTube channel, we did a video on it, but basically when, and I heard this on another podcast, but when a storm rolls into the plains, instead of running away from the storm, the buffalo run into the storm because it gets them through the storm the fastest. So not only does that speak to like business, like you hit problems head on, you'd be like the buffalo, but being in coastal Alabama, we literally deal with storms, and sometimes we have to run into them, figuratively speaking. So that's the reason for the buffalo.
Guys, that's what I've always told y'all on this podcast. If you're going to be an agency owner and you're going to be a leader, you got to run into burning buildings and not out of them. And I've got three. I've got 3 this morning I've got to run into. 3 pissed off clients that are waiting with bated breath, Scott Howell, to call them and make it all better.
Don't tell them you recorded a podcast first.
I won't. But we started this podcast and I said, I got to put my phone on airplane mode, because if I don't, it's going to ring 4,000 times during this podcast. Guys, we got a lot to talk about today, and we have a fantastic guest, and I want to bring him on and give him the introduction that he has always deserved. Today, as always, our mission on this podcast is to help insurance agents in any way we can. This guy has got what I call the it factor. He is a fantastic dude. I've gotten to know him on our Facebook group, but more importantly, when we stop kidding around on that Facebook Messenger group and he starts talking insurance, I listen, because I can tell just in what he says on that Messenger group that we have that he really knows his stuff and he has got his agency dialed in. So without further ado, let me bring him on the show. He is originally from Mount Olive, New Jersey, and he currently resides in San Diego, California. He is a 2001 graduate of the University of Maryland, and in 2005, he joined the Independent Agency Channel, serving as both agent and sales manager, overseeing a team of 26 agents and account managers. In 2010, he was named the president of Fusco and Orsini Insurance Services. The firm specializes in commercial insurance with an emphasis on construction, and the firm's growth over the past 12 years has enabled him to focus on consulting with clients on risk management, compliance, general business, and technology. Ladies and gentlemen, it is my profound honor today to introduce to you first-time guest on the IGP, and I can promise you it will not be the last, Mr. Mike Fusco. How are you, Mike?
Scott, you're so good, dude. I think they need to hire you over in Tuscaloosa.
Ladies and gentlemen, welcome to Bryant Denny Stadium.
We would not be friends anymore.
Yeah, actually, let me reframe that. I think the Auburn Tigers need a new.
Auburn has got a jam.
They need a lot of new stuff right now.
They need a lot of new stuff at
dumpster
Auburn,
fire
guys.
over there.
Guys,
Yeah.
if y'all aren't keeping up with what's going on at Auburn University's football program right now, do me a favor. Walk out to whatever business you are, throw a can of gasoline in the dumpster and light it on fire, and you will be watching firsthand the Auburn University football program at work. We may just give up football at Auburn before this is all over with. But I've always wanted to get up on the at Bryant Denny or Jordan Hare Stadium and do the, ladies and gentlemen, you can purchase your official game day program at any of the Jordan Hare exits. I've always wanted to do so.
Auburn does have a very, very, very good announcer as a and you actually you sounded pretty close to him, but you know what's funny is he looks nothing like what you think he would look like. You would think he's this big guy like Scott with a deep voice. He's really not.
He's like, hey guys, how are y'all? Hold on, I got to announce something. Ladies and gentlemen, please welcome
basically
our friends from Baton Rouge, Louisiana.
Scott. It's like me trying to be Scott, basically.
Bradley, we're not going to tell the story that Mike Fusco, which I begged him to tell on this podcast, but you know, it is far be it from me to hide from the truth. Bradley does a very, very good job, folks, of being my liaison between the insurance industry and myself, because he knows, and you do a fantastic job, that the truth has always come out of my mouth. And a lot of times Bradley will stand between me and whoever else is on the other side to keep from me getting to that person and saying what I really think. And
you guys have it's the perfect partnership, man.
It is. It really is. I want to tell a One City World Tour story that I have not told yet.
Okay, so before Scott says that, Scott Howell's stories are my favorite, man. Like when he hops on the video, posts something on Messenger, man, that's my entertainment. So Scott, I can't wait to hear this.
So the reason I bring this up, Mike, is you and I both have a public service announcement for all of the insurance agents listening to this. And our job is to row the boat just a little closer to the lighthouse every week. Guys, I'm going to tell you something today. It's a public service announcement. Mike Fusco will back me up on this. If you're going to have a party, office party, employees, team members, spouses, whatever you do, whatever happens, it doesn't matter where it is. It doesn't matter when it is. It could be Christmas, could be Halloween, could be anytime. Do not let people write this shit down. Do not let people get shithouse drunk on tequila. And I'm about to tell a story as to why that is. So Mike and I have had a conversation about this. I have seen this in my lifetime firsthand, but the night that the One City World Tour ended, which was the 21st, we went till about 3:00. A lot of people went home after that, had their luggage, got on the plane, went back. I was staying in Denver until Sunday. That day, the last day of the One City World Tour, was my wife's birthday. And I took her out. I rented a guy that I got to know while I was out there, brings in a kind of a limousine type vehicle, and he rides us around Denver and shows us a bunch of stuff. And we were out with some other people, another couple. And my wife's dream, because she loved the movie Coyote Ugly so much, is she always wanted to dance on the bar at a Coyote Ugly. So we ended the night at Coyote Ugly, which was about 4 blocks from our hotel. And I haven't even told Bradley this story. That's how embarrassing this story is. But far be it from me not to tell the truth.
See, I can't be the liaison when the stories are about him. I'm just like, go right ahead.
And when they're getting this good, you got to just let it go.
She goes to Coyote Ugly. I take her to Coyote Ugly about 8:00. Nobody there. There's like 10 people there, because it doesn't fill up till 10 or 11 o'clock at night.
It's a late night type of spot.
Right. She starts dancing on the bar, which is kind of what you do. The girls behind the bar are dancing on the bar. Well, they take a shine to her. They like her. She's getting up there and she's doing all the stuff. And they start taking bottles of tequila, not shots. It's okay to do one shot of tequila, maybe 2 shots. But after that, you got to cut it off. They are taking bottles of tequila and she's lifting her head back, and they are pouring bottles of tequila in her mouth. So it's probably 3 or 4 shots at a time, and they do that like 5 times.
Oh,
We get back to the hotel about 11 o'clock, and she goes and gets in the shower, and I said, hey, I'm going to go downstairs and smoke a cigarette. By the way, I'm desperately trying to quit right now.
I thought you did quit, man.
I'm still working on it. It is a work in progress. I promise you I won't quit today, as much shit is going on at my agency.
I hear that.
So she gets in the shower, and I said, hey, I'm going to go downstairs and smoke. Well,
I go downstairs and all of us are down there.
I go downstairs, and Aaron Farmer grabs me by the arm when I get out of the elevator, and he's like, you're going to drink with us. And I'm like, okay. Finally, I was like, okay, I'll go. So go in the bar. Bradley's there. A bunch of people were there. David Carruthers and his wife, bunch of people are at the bar. And we had a couple drinks. And then after a couple of drinks, Bradley and I get to talking, and we're going to go outside the hotel and go get in more trouble. And I'm like, you know what? I think that sounds like a brilliant idea. Just about the time that happens, my wife sends me this text message, and I'm not going to say what it was, but it was the worst.
He showed it to me, and I was like, you need to go upstairs.
It was the worst text message she's ever sent.
Like, dude, change your plans.
Guys, girls, listen to me. I got on the elevator to I believe it was the 8th floor, Bradley, or the 5th floor, 8th floor. I don't know. I walk in our room, y'all. She has packed everything we own in the suitcases. She is sitting on the side of the bed, like as I walk in the bedroom, and she looks at me and she goes, I want you to take me to the airport right now. I'm going home. Hand to God, that's what she said. And I said, look, I go into sales mode. I said, look, I tell you what we're going to do. Because I knew what it was. It was about 12 shots of tequila is what it was.
Yeah.
You
weren't down there that long.
She was
maybe 30 minutes.
She was furious. I said, tell you what we're going to do. Let's spend the night here tonight. And if you get up in the morning and you want to go to the airport, because we weren't coming back home till Sunday. I said, if you get up in the morning and you still want to go home, I will get an Uber and we'll be home tomorrow afternoon if that's what you want. So she agrees to that. Wakes up the next morning, looks at me, and she's like, what happened? What happened last night? Why is all of our stuff packed in suitcases?
You're like, we had a great night. Everything was good. Everybody was in a good mood. I did definitely not stay down at the bar with Bradley for 2 hours. Everything was great. We had an awesome time.
Yeah. She kind of remembered it. She was embarrassed.
Did it come back to her a little bit as the day went on?
Yeah, a little bit of that.
That tends to happen, yeah.
But I'm telling you right now, without telling Mike's story, need to avoid at all costs people drinking bottles of tequila at parties, because it will end badly. I can promise you.
Not a good move.
Hey, Mike, before we get into our podcast today, I want you to go back in time with me, get in my DeLorean, and just go back to your time when you left the University of Maryland after you got your degree, and talk about how you got in the insurance industry and bring us up to today.
Yeah, man. So I left Maryland 2001. Go Terps. I had some buddies that had come out to the West Coast, specifically San Diego, that graduated ahead of me at Maryland. So I was like, yeah, man, I was going to go back up to the New York area, which is, where my family was, a lot of my friends. And I said, man, I'm going to go check out San Diego. So I went out here in the summer, 2001, and never went back. So long story short, I got my first insurance job with Geico, the famous
Lizard. Got to start somewhere, Mike. Got to start somewhere.
Got to start somewhere, man. So I got my job there in 2002. Learned all we did was sell auto. I was on the phones for a year. Then I got in a supervisor program, had a team of agents, left in 2005 to go to an independent agency. And that agency is where I learned specific E&S, but particularly construction.
Right.
Because we were 100% a construction shop. It's literally all we wrote. The agency wrote about $50 million in premium. We had, when I first got there, over 50 people, all construction. So you guys can imagine what that was all about. But it was a crazy place, man. But it was a lot of fun. I learned a lot. I was independent, kind of had to learn on my own, commission-based, got on the phones, called the blue books, got it leads any way I could, and grew a pretty nice book, became the sales manager there. And when 2008 and 2009 hit, the construction industry took a major downturn. So I said, you know what, man, I got to diversify. I need to get into other industries. The agency owner I was working for didn't really have interest in that. He had other outside businesses, other revenue streams, other things he was focused on. So I left and started this agency in 2010. And since then, it's been all about this, man. So it's been a lot of fun. A lot of challenge, but a lot of fun.
So let's go back for just a second. I find this wildly interesting. What did you learn from Geico when you were there? Something that these agents can like take from, because I've never had anybody on this show in 200 and some odd episodes that worked for Geico. There has to be some stuff there that,
no doubt
I'm talking about positives, like things. You're like, hey, I need to carry that on with me.
Yeah, no doubt about it. Their training is great. You know, they're to learn how to be efficient, to learn how to bring a customer through a sales call.
Did you guys word track?
Oh yeah. They tracked calls. They listened to calls. They tracked objection handling. They tracked the level of expertise with the client, how well you treated them. I mean, it was everything. They really taught you ethics in terms of selling policies the right way. I know there's a misnomer, I think, in the industry that Geico just writes the cheapest, dirtiest policies out there. I think in my at 1 year, I met metrics to be one of the top agents, and I sold over 1,300 policies in a year. So you can imagine the amount of efficiency, multitasking you need to do. Documentation. They were really big on documentation. Everything you did, you really had to document, which something that we practice very closely today at our agency. I think documentation is imperative in the insurance industry. So yeah, man, that type of stuff. I met a lot of good people there. I have a lot of friends from there that have grown in the industry. Some are still there, but a lot kind of went on and did their own thing.
So what did they pay you guys on commission? Did they give you any commission, or was it a straight salary job?
That's a great question, man. So it was hourly, and then there was no commission. It was a bonus structure.
Gotcha.
So if you sold a certain amount of policies, you hit a bonus, but you wouldn't get paid out until, I think at that point it was 90 days later. And any policies that fell off the books, any attrition, you wouldn't get paid on.
Right.
So if you sold 120 policies, you thought you were getting a $500 bonus. 90 days later, 100 of them stayed on the books. You just got a $300 bonus or whatever it was.
Right.
So yeah, but no commission, obviously no residuals.
Yeah. Right.
Yeah. You never talk to the client again.
Yeah.
I went to a completely different department after you.
Sure. Servicing department.
Yeah.
So Mike, the reason we came on this podcast today with you, and I think we're going to have to walk a tightrope today, because I know for me, it hasn't been too terribly long ago that I did not understand a lot of what we're going to talk about today. And
Sure.
What we're going to talk about today is agency billed accounts.
Yep.
Excess and surplus. So let's go all the way back for those people out there that generally, maybe they're a captive agent and they only sell State Farm, or maybe they're new to the independent world. They sell more of the standard, the blue blood stuff that
for sure.
Downloads into their AMS, commissions and all the stuff. And they just don't really know much about it. Talk a little bit to them about what excess and surplus is, and what we call agency build, before we really get deep into this. I think they need to know that.
Yeah, for sure, man. So I look at it as a different marketplace for insurance. That's how I think of it. The excess and surplus marketplace, whatever you want to call it. A lot of carriers that write in that space are non-admitted, but to me, it's a market. I don't know if you want to call it a secondary market, because it's not your mainstream carriers that write this stuff. It's not your Liberty Mutuals, your Hartfords. People, a lot of times customers never heard of the carriers. So it's really a whole separate marketplace for insurance products that you can't get or can't secure in the preferred or standard market. Agency billing means that your agency is 100% responsible to bill the account. So you're getting the invoice. So you write the policy, you're getting the invoice. And what you do with that invoice, whether it's, you collected the premium in full and you're retaining your commission and then paying it off, or you're financing, whatever it is, agency bill, meaning you're billing it, it's on your statement, it's on your invoice, and it's your responsibility to get the carrier paid.
Right. And to go a little deeper with this, for those of you that don't deal with a lot of agency build stuff, it is expressly written in your contract that through this broker, wholesaler, MGA, whoever it is you're doing this excess and surplus through, you are responsible. Your agency is responsible for anywhere, depending on the account, between 25% and 35% of that down payment. So what does that mean? If I'm the agent and I'm selling a fireworks manufacturing plant's insurance, and let's say doesn't matter the amount, but let's say it's $100,000 in premium, and the down payment is 25%. Once I tell that underwriter, once I email that underwriter and I say, bind this account, my agency is now on the hook for 25% of that $100,000. Is that right?
That's correct. Yep. 25% minimum earned premium is also something that you hear it called a lot, meaning that is earned. The second you bind that account, that 25% is earned, is done, it's accounted for, and you're responsible.
You are responsible. And we have on multiple occasions, I would say 3 or 4 times by the skin of our teeth, not had to pay a carrier a lot of money, $10,000, $15,000, $20,000, where somebody decides after the agent has told an underwriter to bind the account, hey, by the way, I just got back with another agency and they're cheaper. I don't want that anymore. 30 minutes after we've bound an account.
It happens, man. It's for the audience. I think something that, especially for people that don't know E&S real well or agency billing, it could be dangerous if you don't know what you're doing.
Absolutely.
I think that's where what Scott's saying is if you don't know what you're doing, and I'm not saying that your agency doesn't know what they're doing. I'm just saying, we all learn sometimes we learn lessons the hard way.
Right.
And if you make a mistake and don't really have the processes down and know how how that business works, you could cost yourself
a lot of money.
Yeah.
So let's talk about those processes. That's why you're here today. I want you to help these agencies and help me, because I think sometimes there's a lot of moving parts here with agency billed accounts, which are typically going to be excess and surplus. And one of the big things that we've struggled with, and I think we've probably got our hands around it as good now as we've ever had, is we now write so much excess and surplus in our agency that, guys, you got to remember, this stuff is not downloading into your AMS system. So if somebody, whether it's the agent, the account manager, a VA, if somebody is not creating that client shell and then inputting all of the policy details into an RAMS system, which is Hawksoft, by the way, then there's just not going to be anything there. So you've got this policy that's been sold, and your agency, besides emails from the producer to the broker, that's the only thing you really got, unless the broker that you're using as kind of the middleman here has like a dashboard where you can go into a place like a RPS dashboard and see your policies. But there is no record of that stuff. And some brokerages, some MGAs don't even have a dashboard. You just get like a monthly statement from that broker.
You're absolutely right. And I think something that I realized early on is that, the checks and balances fall with you, right? The carrier's not going to catch something for you. The GA is not going to catch it for you. The client's not going to catch it for you. You have to catch it. You have to have processes in place, workflows, and you have to have very, very efficient processes in place that make sure that you don't miss anything and nothing falls through the cracks. And I think you hit the nail on the head there, Scott, because we almost act like an assembly line. Yeah. Really, that's what we are. It starts in stage 1 and it ends on stage 10.
Right.
And everything that happens in between there is heavily documented. People have certain jobs that they do throughout the process. And I think that's something that you bring up and that it's really important for the audience to know, is that it should never be interrupted. Interruptions are where things really could go wrong on E&S business, agency bill business. Once you start a process, you want to finish it. And again, I've learned that the hard way. I've been doing this stuff for a long time, and I've learned my lessons in ways that have cost me. But, you really need to be focused on doing it the right way and not missing any steps in the process.
So let's stop right there. We've described what excess and surplus is. It's going to typically be something that a Nationwide, State Farm, Travelers, Guard, State Auto owners, all these blue blood, what we call blue blood carriers, aren't going to want. And it could be because of, and I've always called it, it could be an exotic risk, right? Yeah. Something that's so far out there that it, in their risk matrix that every underwriter has access to within their company, it's too high for them. And they're like, we don't want that. It could also be maybe somebody just started in a business and they don't have a lot of experience. So the carriers are like, We might ride it 2 or 3 years from now, but they've never done this before. So let's let them go excess and surplus for a couple of years and then come back and see me. That can happen too.
That can happen too. Yeah. I call it above normal risk for
Correct.
some people.
That's a great
Other
term.
people, like you say, I call it, and above normal risk could be someone who's new.
Right.
But I think also, Scott, one thing that we need to keep in mind is that in certain industries, in certain classes of business, the E&S marketplace actually provides a better form than
Agreed.
And people miss that.
Well, let me say this. I'm going to raise my hand and say, before I got into excess and surplus, like really got into it, if you'd have asked me that 5 years ago when I was a captive nationwide agent, my thought process was, well, the form that excess and surplus on is not going to be as good as what you would get with a nationwide or
Exactly.
It doesn't matter which carrier, but the blue bloods.
Right. And that's not the case.
No.
And a lot of times the forms that those blue bloods offer, may have certain limitations, exclusions, things like that are in them that as an agent, you need to know. And if you're working with a certain client that's involved in certain operations, you got to pivot and go outside the box, which is what I like to call E&S. Whereas the blue bloods are kind of in the box of underwriting, you go outside the box and you're really putting something together for them that works for them. You're removing forms, limitations, adding things that nature. I'm not trying to get too complex here, but yeah, you're right on, man. And it's funny that you say, like, I'm sure you've seen this, but a lot of those blue bloods, Nationwide, Hartford, Liberty, now you see them developing arms,
right?
For the E&S business, purchasing carriers, Nationwide, Scottsdale.
Yeah. Didn't they buy
AIG,
Hiscox or somebody?
Yeah. Hartford has Maxim, I think.
Yeah.
Liberty has, I forgot who they have. Who do they have now? I don't know. Ironshore, it might be. I'm not sure. But anyway, yeah, man. So I think even the blue blood carriers are realizing there's definitely, it's a marketplace that they can't avoid or they can't ignore. You see them getting into it more. But
well, and also, let's just face facts. The way that the insurance industry is going with all of the natural disasters and all the things, and it seems like a lot of carriers are kind of trying to consolidate into the Midwest because they don't have quite as many of the $2.4 billion natural disasters. You're seeing more and more excess and surplus lines policies being written throughout the country.
No doubt. And I think it's cyclical in a lot of ways.
It is.
When I first started in commercial in 2005, it was right after kind of 9/11 shook the financial world, and
right.
Almost everything you wrote was E&S with sunset clauses, manifestation clauses, all types of restrictions. And then it started broadening up again, when carrier loss experience got better. And then you start seeing some of the preferred carriers come back in, and eventually they'll exit, like you're saying, Scott, because there's just too many catastrophes,
right? Too
many losses, and they have to tighten up somewhere, right? And then you see people starting to write more E&S.
Right. So let's stop right here. I think we've done a fairly good job of creating this baseline for the industry and the people in the industry on what is excess and surplus and agency build and all of that stuff. I think they've probably got a little bit of an understanding of what that is. Scott Howell works for you, Mike. I work for you. I'm one of your team members. I'm a producer in your agency. I write a piece of excess and surplus business because I've gone out and met with an exotic risk. They want to do business with us. I come back to your office. I quote it through. And I guess that's my first question. How many brokers do you guys work with or NGAs? How many do you guys work with?
We have a good 20 or so, but
Really?
We have our favorites, of course. Yeah, we have a good amount. We're also surplus lines licensed. We're a surplus lines broker ourselves.
Okay.
In the state of California. So we actually in a few states. So there are some carriers that we're directly surplus lines licensed, for example, like USLI.
Right.
Well, we'll write our business direct with them, not through a wholesaler. And we
Right.
do all our own tax filings, all our own surplus line association filings, diligent search reports, everything on our own, and do our own filings.
And you do that because you make more commission per policy off that.
You do.
Yeah. If you're going through a wholesaler, then you're obviously not making the average is like 10% new.
Yeah, 10% new. Maybe you'll get 12.5 or 15 if you're lucky.
Right.
But we
And
see
then
22% from, because the wholesaler is taking, if
Right.
the carrier's paying them 22%,
sure.
they're taking 12 and giving you 10.
Correct.
And they're adding a fee.
Right. Exactly. And In Alabama, they're adding more than one. There's usually about 4 different fees on there. State and federal policy administration fee, blah, blah, blah. So, okay, well, I work for you. I come back, I quote excess and surplus through one of your 20 MGAs or brokers or whatever we want to call those. I'm going to write the policy. Go through the process that you use, that you and I have had discussions about in the past on kind of how that process works from Scott writes the policy. Now what? Now what happens?
Okay. So before we start about the process. So the process of quoting, proposing, and getting signatures and payments is number one.
Right.
So we have templates that are all predefined with language, coverage, acknowledgement forms, subject to whatever we need to disclose.
Let me stop you right there. You're not utilizing the MGA's template.
No.
You're taking that information and you're putting Scott's putting that on our agency's template.
Correct.
Okay.
It's our commercial template is predefined. It's ready for use for every one of our producers. It's 10 pages long. It has all the language and legal disclosures in it. We're putting all that information in it. The client signing off. We're doing a coverage acknowledgement form. Again, predefined checkboxes, D1s, SL2s. Everything is sent the same way every time.
Right.
We're collecting signatures and we're collecting payment before we ever bind a policy.
Oh my God, yes. Folks, if you don't get anything else out of this podcast, for you young bucks out there that are going to jump into excess and surplus, agency build stuff, do not bind that policy until you get some money, whether it's a down payment. We're going to get into this in a minute. We're going to get into, because I don't think a lot of people even understand that those agency build accounts are pay in full accounts. So you've only got 2 options. Option number 1, get a paid in full check or credit card, depending on what kind of setup you got with places like ePay Policy. And I know there's some others out there that you may use, Mike. Or you can do what we call a premium finance agreement. We're going to get into all that in just a minute. I want to make sure you guys understand that. But Mike, I have sold the policy. I've used our template. Now, here's my question about our template, because I'm a newbie. I've only been with your agency for a week, but I'm a rock star and I can sell shit out of some insurance.
You're the man.
So on our template, are we breaking down all the fees and the taxes and all that, or are we just lumping all that in?
Oh, we're breaking it down, man.
Okay.
And we're putting initials next to every fee we charge. And every state that we write in has its own broker fee disclosure. Right. And our clients are initialing right next to the fee.
That broker fee that you're talking about, that's your fee on top of the.
That's our fee. We also show them the company fees, the inspection fees, the surplus lines tax, how much is earned. All that stuff is right in there. If there's going to be finance fees, we told them about that. So everything's disclosed, broken down, line item by line item in our template.
Okay. So we've done all that. I've given them the proposal via email and I've called.
Yeah, DocuSign. They DocuSigned it.
Right. We got it back. Now we got to the payment screen. And this policy, because this is a electric bull riding manufacturing plant out of Indiana, and all they do is they build electric bull riding bulls for bars and county fairs. That's all they do. That's the only thing they do. Now, guys, we know there's no risk in that. Nobody's ever fallen off an electrical bull.
No, and people never ride them after a night of tequila drinking.
No, never. So the policy premium on this, because this is a high risk on the matrix, right? This is high risk, is going to be high. I just had to tell the guy that owns the electric bull riding manufacturing plant, this is a $250,000 policy is the premium. And he's like, well, hell, I don't want to pay it, but hell, there's only about 3 carriers that'll write this. And this is the cheapest I found it for, Scott. So yes, I want to do it. $250,000.
Yep.
But I don't want to pay it in full. Because
Nope.
I want to keep that money in my operating account, Scott. So what's my other option?
So what we'll do is, and we're going to get the premium financing. So here's how the process works. We get the signed proposal, comes back in DocuSign, it comes into our email. We make sure we have payment. If it's a new customer, they're paying with a credit card. Our accounting department is running the credit card payment before.
Only credit cards on full pay?
If it's a new customer, credit cards. It can be a down payment or it can be a full pay, but we need the credit card because, the bank takes too long to let you know if the payment went through.
Sure.
So we're not buying any coverage until we know we have a credit card. If it's a repeat customer, they can pay with a check, no problem, ACH. Once the payment goes through on the credit card, bind the coverage, we open an activity in our AMS. This is where the process comes in, okay? The first activity is process. We assign it to our CSR. Process means that we pull all the documents on there, create the summary of insurance, and they have to enter the policy, like you're saying, Scott, in the AMS with the TBD waiting for the policy number.
Now, who's doing that again? Is it the producer or the account manager?
That's the CSR.
Okay.
Well, either the producer or account managers, mostly the account managers adding it in.
Okay.
But if they're assigning it to the CSR.
Got you.
At the same time they assign it to the CSR, they open up a policy check activity, and that stays open.
What's a policy check activity? What is that?
So that means that we will wait for the policy to come in. That activity will stay open until we get a copy of the policy, and we check it to make sure everything's accurate. The coverage limits are right, the deductible, the classifications, the address, which is really important. So here, this is what you're saying, checks and balances, making sure nothing falls through the cracks. We're making sure that activity stays open until the policy is attached.
Gotcha.
We also open a pay activity. Pay activity gets to our accounting department, and this is where all the finance comes in. So, we're making sure we run payment, invoice payment, disperse to the carrier, whatever percentage is due to them.
Right.
And then set up the premium financing if it's due to them.
Okay.
Pay activity gets closed once we get the notice of acceptance or a pay in full invoice. And we have a welcome kit activity. Once we get the binder, we have a bind activity for the actual binder and the invoice. So I'm probably getting a little complex here, but
no, keep going. I think these people need to know this because this ain't Kansas no more when you get into this world.
Yeah, it's a different world, and you have to be dialed in,
Yeah, no doubt.
So yeah, for one policy, long story short, there's 5-6 activities on one policy. They get assigned to different people, CSRs, account managers, accounting department, and everyone has their role in that process.
Are you sending them out the physical policy in the form of like having somebody in your marketing department or an account manager put the binder together and actually mail them a binder with their policy? Or is this just being done electronically where an account manager downloads the policy and then forwards that to them via email so they've got a copy of it?
Great question. So we pull it in on the policy check. Once the P check activity comes in, once the policy comes, we pull it on there, make it client accessible.
Mm-hmm.
Once it's client accessible, it goes into their portal, their client portal automatically.
What do you use as a client portal if these guys are getting into this? Like, is there
CSR 24, part of Applied Epic?
Okay.
Epic's our management system.
Right.
Yeah. So we pull it in there, make it client accessible, and then an automated email goes out from the management system telling them that particular policy came in and it's in their portal.
Okay.
And that email saves in their file.
And they have access to that portal through username and password.
Correct.
And then what happens?
So then, you get the binder invoice, you have the policy. I think, the accounting has to happen. You said this before, agency bill, that's probably our heaviest load when it comes to E&S business. You need to make sure you transact payment, receipt payment, invoice the policy, pay out the carrier, finance the policy before your accounting's done. And this is where I say that it cannot be interrupted, because if you interrupt that process, you will forget something.
Right.
You will either forget to pay the carrier or set up the financing, or you'll forget to run the insurance payment. Something will get missed and it will come back to you, 30 days later with either a notice of intent to cancel because your agency bill wasn't paid off, or a pissed off customer because they didn't see the money come out of their bank account.
Right.
Or it could be several things, but
Yeah.
you get it. You know what I'm saying, Scott? You know how it goes.
So let me ask you this question, because there's a lot of people that listen to this podcast that don't have Applied Epic as far as their management system.
Yeah.
And you're a technology savvy guy. I think you low play that, but I think you're a lot more tech savvy than you let on. Is there another portal that somebody like Scott Howell could utilize outside of our management system? Because I don't think our management system has like a portal for customers to go in. Maybe it does, and I just don't know about it.
Hawksoft, right?
Yeah.
It does. It probably does, huh?
I need to check on that and see.
Yeah.
Like a customer portal for them to log in and get their stuff. But is there anything else outside that an agency could utilize to, if they're writing a bunch of excess and surplus business, an outside portal that you could take this stuff, put it in, and then give clients a username and password?
That's a great question, man. I'm not sure because I've always had it attached before I came to Epic. Before I moved over to Epic, I've had AMS 360.
Another $1 billion idea by Scott Howell. Guys, I'm just here to give you guys money. That's all I do. If anybody
My mic's working now.
Look at Bradley.
Bradley Flowers, ladies and gentlemen. Bradley Flowers.
That has never happened before. Everything on my screen, including my mouse, froze except you guys.
Wow.
We missed you, Bradley.
We did.
Scott, let me ask you this. The GloveBox guys, they're an app, but do they have is there a desktop portal too?
Well, there is, but they have not yet turned on the functionality for commercial insurance. All their stuff right now today is February the 10th, 2022. February 10th, 2022. As of today, they don't have a commercial portal, but that's coming real quick.
Okay. Something like that will be really helpful for people.
Their portal, it allows you to go in. It's pretty cool. So it allows you to go in and set up your client's account in there. That way, because initially you're relying on them to set it up and that sort of thing. We all know people don't do the things that we ask them to do. Yeah. But you can go in and say, hey, Miss Jones, I've already set up your GloveBox account. Here's your policies. Here's your link. Boom.
So, Mike, Scott's written the policy. Now, the first thing I got to do, guys, before we talk about binders and all this other stuff in the activity matrix that Mike has in his agency, I ain't binding that damn policy till I get payment. And Mike brings up a good point. Let's say it's $100,000 policy. The carrier's wanting 25% of that, right? And your agency's on the hook for that 25%. If you let a new client write you a check, and let's say that check gets delivered to your office or however it gets there, and you put that in the bank, and then you go, okay, we got his check, we put it in the bank, so now we're going to go ahead and bind it, and we're going to bind this policy. What happens 5 days later if the bank calls and says, hey, that check bounced?
Exactly.
You're screwed. Unless you can get that money back from them. Sometimes you get that whole, oh, I'm sorry, the money must not have been in there. Let's try it again, have them run it through again. But I liked your idea of doing nothing but credit cards so that it hits instantly.
For a new customer.
Yeah.
Customer we don't know. And again, I'll say this for the 10th time on this podcast. I have learned the hard way.
Yeah, get hit.
Does the customer pay the fee or do you pay the fee?
No, we pay the fee. And I'm glad to pay the fee to make sure that the funds are there, that we're not going to lose thousands of dollars and just paid for this guy's minimum earned.
What do you mean by fee? Because there's going to be some people out there that don't understand what you're talking about.
Credit card fee.
Oh yeah, credit card.
And I assume you guys have, like, with your vendor, you have like a cap on that to some degree.
Yeah, we do, man. And you bring up a good point, Bradley, because we have two payment forms that we offer. One is without the fee and one is with the fee. So for a new customer, we only allow them to run credit cards. So we can't charge. Technically, we really shouldn't be charging them a fee because we don't give them an option. That's how I think about it. If it's a repeat customer and they can pay with a check, which doesn't cost us anything, then we will charge them an admin fee to use a credit card because we're giving them the choice. You can use a credit card or you guys know what I mean?
So as someone who's been in purgatory for the last 30 minutes and could not hear you guys, you and I spoke last week about your accounting practices, which is something I'm always trying to fine tune in my agency. And you mentioned that you guys have almost like a centralized, all accounting stuff goes to one person and that person sets everything up. If you have not talked about that yet, talk about that a little bit.
Yeah, we did slightly just with Scott and I talked about our pay activities, but yes. So I told Scott early on, it's like an assembly line. And in the assembly line, everybody kind of plays their roles. So we kind of move the policy through the different stages. And part of that, the role is the accounting department. So we make sure that the people in the accounting department, all their jobs is to account, to work in the system, run payments, invoice policies, pay statements, finance them. Anything that has to do with the transaction or any money is done from just our accounting department. The producers, the account managers, CSRs, principals don't touch it.
Yeah. And what I like about that is when you have, Matt Namoli with GNN Insurance, they have Matt said a few things to me before. He's like, such and such owns this pipeline. Like this function is their thing, right? And what I mean by that is like when you have the same person doing the same task every single time, it gets done in a consistent way. Because even if you tell Sally and Brenda to do it the exact same way, there's going to be slight variations in the way that they do things. Correct. Which when you talk about an insurance agency, the only way we win is volume. when you're talking about volume at scale, that small, 1% difference can make a ton of effect,
Oh, dude, it's huge. And no balls get dropped. That's the big thing when you're dealing with agency bill and E&S business. You can't have people dropping balls. You
You
can't
drop
have
the ball,
people,
it's on you,
the ball falls on you, man. And if someone forgets to do one of those tasks,
Yeah.
there needs to be accountability too. So I know, and we all know in this office, that if a policy doesn't get set up for financing, and 30 days later we have the carrier looking for that balance because we paid ours, but there's still a $10,000 balance because the finance company never paid because it wasn't set up.
Yeah.
We know who dropped the ball.
We had one recently that Mike helped me with that I'll tell now because it's been solved. Actually, we had a client on an engineering account that E&O policy that he had a job that required him go from $2 to $10 million limits, and we made the endorsement, generated a $16,000 increased premium, and we're like, Mr. Smith, that wasn't his name, Mr. Smith, we can actually add this to your financing super easy. It's like the easiest $16,000 upcharge anyone's ever had in the history of insurance. And he's like, okay, cool. So then a couple days went by, my account manager reached out to him to get the signature on the change of finance agreement, and he said, peace, I'm canceling, I went somewhere else. And this is someone we had pretty good rapport with.
Yeah.
We normally we would not make that endorsement until then, but until we get the payment. So how we ended up solving it is the return premium was more than the endorsement, and I convinced the MGA to take the endorsement amount that was due out of the entire premium, and then they sent the difference to the finance company. Which left a deficit, and the agreement with the finance is between the finance company and the insured. So I'm out of it now.
Good.
And thankfully my broker helped me do that. But you get into some weird, some of these agents in like friggin' Nebraska that are selling Safeco and auto owners and Liberty Mutual and everything downloads, and you don't have to worry. Like, you get into some weird stuff, man, when you get
it's a whole different world. It's a whole different world.
Yeah.
Well, hey, Bradley,
like 2 different businesses.
Bradley, you're out of it till that guy gets a damn letter from a damn credit agency wanting $16,000.
He knows it's coming. We already set the precedent with him that, like, hey, you're going to pay this.
Yeah.
He know what he did. He knows what he did.
Yeah.
He tried to pull a fast one.
So the one part of this we left out, Mike, that I want to make sure we go over is the premium finance agreement.
Yep.
Which, depending on the size of the account, if it's a $1,200 account, then they're probably just going to pay in full. If it's a $120,000 account, they're probably going to want that set up on premium finance, because guys, when you get into excess and surplus agency build, they will tell you got one option, it's pay in full, except there's a caveat to that. We can do premium financing. So go ahead, Mike, tell them about PFS.
PFS is good stuff, man. It's good stuff. So no, it's Scott
basically the premium finance company is paying the premium in full.
Yes, less the minimum earned. We always collect the minimum earned and any fully earned fees. Okay, so we collect the minimum earned. If it's like Scott said, 25%, it's $100,000 policy. You collect that 25 grand. You collect your fee. You collect the broker's fees, inspection fees, company fees, whatever other fees you can think of. They throw in there. You keep your commission. You remit that to the general agency. The balance of $75,000 comes from the premium finance company, right?
Mm-hmm.
And there's interest, obviously. And a lot of times it's pretty hefty in interest. And
but because you're only financing it for 1 year, it doesn't really work out to be that much. Yeah.
And it's not.
Some people wig out when they see that, though.
They do wig out, man. They do wig out because they're used to paying, like, maybe they're paying an installment fee for $7 every month with their Mercury policy. But now they go to premium financing and they see like an 18% APR. You're like, what the heck is this?
Right.
Mike, do you tack on through your premium finance company that you use in your agency, which
Capital Premium.
Ironically enough, all these, I call them brokers, like the RPSs and all these other, they will send the quote with their premium finance.
Oh, of course. They want to do the financing. Man.
Sure they do. Sure they do.
They are in the producer
do you utilize one premium finance company and then they put a few points on there for the agency?
Yes.
Like a set, like I know we've got ours set at 4%.
That's exactly
and that changes on state, guys. Don't just assume you can do that. Some states don't allow you to do that.
Yeah, exactly. Some states don't. And we only use one finance company, premium finance, Capital Premium Financing. I I love them. They've
Yeah.
done a great job for us over the years. And everybody has their, I mean, there's a lot of great finance companies out there.
Yeah. I think you should in if your state allows it, so we charge an agency fee on all E&S business. And then we also charge an additional fee if we finance it. Because it adds more frustration, more legwork has to be done, in that case. And it also incentivizes the customer. Hey, and it's a small, very, very small amount, but you don't want to pay this small amount, pay it in full. What do you guys do, Mike, fee wise? How do you structure your fees? Not for finance, but just like E&S policies in general.
It's a good question. It's nothing too formulated. We base it on premium a lot of times. We ask if it's construction, if it's a new customer, we like to know how many certs a year they tend to have to issue.
Yeah.
If it's a repeat customer, we know the amount of workload that we
probably have it down to a science.
Yeah. I mean, it's nothing predefined or set, but the heavier the account, the more certs we're issuing, the more service we're doing, the more times they've been in cancellation the year before, we're going to charge a heavier fee. And again, I told Scott before, like the fees are fully disclosed. They're right in front of the customer every single time.
Yeah.
They initial next to it. They initial next to it in bold, and they know what they're paying us to be there. And I think I told this when I spoke to David on Power Producers a couple of years ago. I said, like, in the industry, I've seen over the years, like, agents are afraid. It seems like they're afraid to charge customers what their worth is. Yeah. And I think on E&S business and the agency build business, you can't be afraid to charge what you're worth. I mean, your customer needs to know what you're worth. They need to know what they're paying you. And if they don't want to pay you what you're worth, then they can go down the street to another agency, right? I mean,
well, let me interrupt you right there. I think what the problem is, I find with my agents, is by the time you put on all the fees and taxes and this fee and that fee, I think there's a little bit of fear of putting that additional agency fee on there, because these people are already seeing 6 or 7 fees on top of that fee. And so they're like, I think there's some trepidation there that, hey, they're already asking me all these questions about these fees. Now I got to answer, why we're putting an agency fee on there. I think there's trepidation with that.
Well, the way you have to think about it too is, let's say you have a $15,000 policy, right? And it's direct bill, right? There's a certain amount of work that's going to directly correlate, typically speaking, generally speaking, to that $15,000, right? Well, now and you get 15%. That's kind of industry standard. Consumers typically know that that's about what we get paid. So if you take, an E&S policy, that 15,000, there's about 3,000 of that's, if not more, that are fees and taxes. So you take that out,
and then 10%,
and then you're getting 10% of 12 grand, which works out to be about 7 or 8% of the whole thing. Right. So a lot of times you have to make it worth your time, because in some cases it's not going to be, again, depends on your state.
It does. And the market will dictate that. I think
100%.
Market dictates. And what Scott says is a great point, but I think that the big picture is that the market will dictate what you're paying and what your fees are.
Yeah, right.
And that as agents and knowing what we're doing and being good at what we do and supporting the client and providing the service, we need to charge what it's worth us to charge to be profitable. And a lot of these E&S accounts, you will lose profit quickly. Yes, I mean, you can get think about it. If you're writing a $5,000 account and you're making $500, 20 certs later, if you're paying your CSR $25 an hour or whatever you're paying them, that $500 profit is gone. It's gone in months.
That's why I'm so big on tracking how many service activities we do in our agency through Agency Zoom, because you can then correlate cost of service. If this task takes this long and the person who does it gets paid this much, I know it costs me, $3 to issue a certificate or whatever, right? Well, then we can correlate that to an account. So we know that a hairdresser is going to cost us, $600 in service throughout the year. Obviously, hairdresser wouldn't, but $600 in service costs throughout the year. Therefore, it doesn't make sense for me to write a $6,000 policy on that account anymore. Our minimum needs to be set at this, and it's not something you can do overnight. You have to put these processes in place to create these service tasks and associate them to accounts on like a 12-month span before then you can go back and say, okay, this is about what it costs to service these accounts. So many people come in and it's all about new business revenue. We don't care. when in fact you're actually running your profitability in the ground because you're signing up a bunch of accounts that are not profitable.
100%. And then, then we're not even talking about the claims and the audits and everything else that comes later on. So yeah, you got to be smart about it. You got to know what you're doing. And you really got to look at each account like, hey, is this worth writing this account?
Remove yourself from the potential dopamine hit you get from writing the account and put yourself 12 months down the road and say, what kind of issues could come from this account? And would I have written it otherwise? And a lot of, because we all have those accounts, you're like, I would have never wrote that.
Oh, dude. Yeah.
So put yourself in those shoes. And what we found is like as I've gotten, and I'm not that old, but as I've gotten older in this business, there's less and less stuff that I want to write. It makes people like Carruthers and some of these guys that have niches, because it's like, if we try to, if Portal tries to do something out of our wheelhouse, usually there's something that pops up that adds some kind of stress or lack of profitability on that account. And it's always, I just want to write it. Like, I just want to write it. Like, I want to win the account. It's always associated that. So put yourself, you know what I'm saying? Unless it's a niche you want to get into. You know what I mean? I was
why producers
a producer while my computer was frozen, strategizing, going after some service contractors that we don't currently do right now. But that's something I want to do. It's a niche that we want to go into. So that's different.
Yeah. And it's why it's hard to have producers, because they're not going to look at it like you look at it. They're going to think, well, I need to make my commission.
Come all.
Yeah. They want to write the policy. They want to earn the commission. But at the end of the day, when the trouble hits, who's dealing with it? Us agency owners, right?
Well, and guys, that's
why
always,
you have to pay them well. That's why you got to pay them well.
This has been the age-old conundrum for captive carriers for years when they set up new agent programs. And if they're not careful and they're not paying people enough, they start writing just terrible business because they're just trying to make numbers, because the carrier has set this thing up where maybe they pay $50, $75 a policy, and you've got to write so many policies a month to stay in that program. And before long, guess what happens? You're down at the used car lots and you're writing stuff that normally you just would not write.
No, it's true.
Just to make it through the program. And so that's an age-old conundrum. Hey, Mike, I got one more question before we get off this podcast today. And this is something, again, that selfishly I wanted to find out from you, because I know your agency size. You guys got a pretty healthy agency over there. How do you handle renewals on agency build excess?
One quick question, Mike. Just quick question.
One small question before we get off here at 1:30 in the afternoon.
So agency build. So we have two different processes for renewals. One is automatic or direct bill, and the other is manual or agency bill.
Right.
We handle the renewal on agency bill accounts the exact same way we would handle a new account.
Okay.
That's E&S or agency build.
Right.
The exact same way. You're doing it again, man.
Yeah.
You're doing it again. You're getting the subs, you're getting the accords, you're getting updated figures. You're talking to the client, you're getting loss runs in your file.
And you guys are heavy applied users, right? So you're probably using Indio or something like that.
Yeah, we use Indio. Yeah. I mean, you're doing it again.
Is the producer getting paid new business commission again, or are they getting paid renewal?
Renewal, but our renewal and new business percentages are the same.
Really?
They're exactly the same. And in fact, something you said before, and something that I thought when I was at my old agency, and I promised myself I would never do again. And I'm not saying it's wrong to do it, but I would never do it again, is pay people strictly commission because it begs for problems, and it begs for people stretching the envelope or, fitting things into places where they might not normally do that if they knew they had a good, solid structure. Again, I know there's a lot of agencies out there that do pay commission only to producers, and hey, if you make it work, that's cool. But for me, I want to make sure my people are paid well.
Yeah.
And the commission portion of it is not the largest, and it's an incentive to keep growing your book and retaining your book, but it's not going to be the bulk of what you're earning at this agency. But yes, they do get paid commissions on renewals the exact same way they would on new business.
Do you mind sharing what your percentages are for new business and renewals?
Yeah, man, absolutely. So we start at 15 with new agents.
15% on new business and 15% on renewal.
Correct.
Okay.
And we go up. We have some that are 25 now.
What's that based on?
It's based on their tenure.
Okay.
Yeah, no, I don't even look at the revenue size. I base it on tenure. I base it on their performance. Each year we do performance reviews.
But then you're also paying them a salary too. Is that right? To keep
our people get
riding
paid
shitty business.
Our people get paid very nice salaries.
Yeah.
We get profit sharing. We get a real nice retirement
Not to mention
structure.
you're in California, so your cost of living, so your salary is probably way more than it'd be anywhere else.
Yeah,
Right.
the cost of living here is, it's through the roof. But we want people to buy in to the big picture. Good retirement plans, good healthcare plans, profit sharing every year. We also have bonus structures to go on top of commissions for certain times of the year. But yeah, man, I mean, I want it to be stable. I look at stability as being important for people. And, our tenure proves it, because we've had people here we typically don't lose people. If we do lately, I shouldn't say that, because I think I told you guys as friends, we had a couple of account managers leave to Marshes and the Gallaghers of the world because they poached them with bigger salaries. But
sure,
what are you going to do, right?
Yeah, I had the same thing happen here about 3 years ago. I lost 2 account managers to J. Smith Lanier. Just paid them some, not double, but probably a pretty good bit more than I was paying. And I wasn't willing to match what they were make over there.
Sometimes you just can't. It doesn't make sense.
Yeah. So let's end this podcast. We got agents out there that have been selling just, blue blood carriers. They want to get into excess and surplus, and they want to start doing more agency build type stuff, which I think you said it best, Mike. It is 2 completely separate businesses almost, and how you do that. What advice would you give them if they want to get into selling more of that excess and surplus line stuff?
I would say forget the sale. Forget the sale first. Don't worry about the sale. The sale can come.
Yeah.
It's not a hard market, I don't think, to penetrate. I think you need to get your processes in order. Speak to whatever legal counsel you have. Make sure you have your templates, your disclosures, everything dialed in and is uniform, so that regardless of who's selling it, they can use the same structure, the same process, the same disclosures, the same forms. So you're not a sitting duck if something goes wrong. Get your processes in place first.
Yeah.
Understand how you're going to work the process on each deal, and then start worrying about producing the business.
Right.
Producing the business should come second. And
then once you do that, pick your broker, your MGAs, that if you pick a niche, they kind of specialize in that niche. So they've got a healthy group of carriers that when you go out to write whatever you're going to write, assuming you choose a niche to do that with, that you can, have plenty of places for them to go see what the rates are going to be for that particular
exactly
niche.
And also someone who's knowledgeable in that industry, so they can tell you, the different forms, because you got to be careful with what you're writing too. Right? You got to make sure an E&S carrier is going to put forms on that they think they can get away with, unless you know what you're doing and ask them to remove or ask them to change the endorsement. So you got to know that before going into it, because you don't want to have to cancel, rewrite. Then you got to explain to the customer why they lost 25% when you only had the policy for a month, because they can't, they can't get on the job and whatever it is, man.
Yeah.
But it's complex. And it is a different business, and you have to almost treat it like it's a whole different channel that you're working.
Well, I appreciate you being on the show today. We're going to bring you back on. We've got a lot of other things we want to talk about, maybe later this year, next year. I want to bring you back on, because you are a wealth of knowledge. If these agents, if any of them have any questions for them, how can they get in touch with you, Mike?
Oh yeah. Hit me up. Call me directly. My direct phone at the office, 858-384-1507. Email me, Mike@foagency.com. Hit up Scott or Bradley. They know how to get in touch with me. And I'm happy to help any way I can. If people are looking to get into E&S, have questions on agency build processes, whatever, happy to help.
Man, I appreciate that. And for the love of God, if you get in it, do not bind a policy till you get the down payment.
Don't do it.
And let it clear your bank, because I'm telling you folks, you do not want to be staring down the barrel of $14,000 that you, the agent, owes some MGA or broker out there that, you have a contract with, and they're like, well, sorry about your luck. When you going to send us our $14,000 you owe us?
Can I tell you one other thing too, Scott, before we leave? And then we'll wrap up. In certain states, a signed insurance offering is the agency or the brokerage is expressly consenting that they're going to bind coverage.
Right.
So another reason why, if it's a new customer, that you might want to think about collecting credit cards is because if you have signed documentation, you need to bind. You can't sit there and wait for 2 weeks to bind coverage to make sure their check clears.
Right.
Because if they have a claim in that 2 weeks and you didn't bind, your ass could be looking at an E&O claim, right?
Yeah, you got to be very intentional on letting them know you are not bound till we get this payment. And the payment goes through the bank because
exactly. So you may want to even think about not signing your side of it until that payment transacts and you know it's clear and you're ready to bind.
That's smart. That's smart. That's the best.
You might want to think about that.
That might be the best tip you've given today is don't sign the application until that money's sitting in your bank account. Then you can sign it and send it in and bind it, because otherwise you're going to be on the hook.
100%, man.
Yeah. Guys, you are listening to the Insurance Guys podcast. And as I say each and every week, rewards come from action, not discussion. Get your ass out from behind that desk today. Go out into the big bad world. Build relationships with clients, with prospects, with other insurance industry experts. Go out there, meet guys like Mike Fusco who can help you become a better insurance agency, make money for your family, for your wife, for your kids, college fund, your husband, your parents that are struggling out there. Go make money for them. Write good business for the agencies that you represent, and write good business for the companies that you represent. Mike Fusco, I love you.
Love you, brother. Thanks for having me on, man. I can't believe this is only the first time.
Anytime, brother. You're always welcome.
I love what you guys do for the industry, man. You guys are awesome. And congrats on the, I wish I could have been there in Denver, but I had I had to coach hockey that weekend. So, but next time for sure.
Priorities, brother. I get it.
I want to be in 2-city world tour.
Guys, you are listening to the Insurance Guys podcast, and we love each and every one of you. Thank you so much for being a part of our family, and we'll see you back here real soon. Take care. Thanks for listening to the Insurance Guys podcast. If you need to know more about me or you need to get in touch with Scott, you can always reach me at theinsuranceguyonline.com or email me at scott@iprotectinsurance.com. And if you need to get in touch with Mr. Bradley Flowers, go to portalinsurance.com or email him at bradley@portalinsurance.com. Guys, we love you. We thank you so much for listening to our show and being a part of our family. And we look forward to seeing you again next week on the next episode of the Insurance Guys podcast. Take care.